All down. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me is Mr. Peter O'Malley. Peter, hello.
Ciaran, good evening to you.
Great evening to you, my friend. I want to talk tonight, Peter, about the Sydney property market, which really is the focus of this podcast, even though we do waver on occasion. But I know that we've been in the new year for a little while now. The market is starting to make some moves. So I thought what we might do is break down what's actually happening across your area of expertise and the pocket of Sydney you look after, but also what's happening more broadly across the market. What trends are we seeing? What kind of buyers and sellers are we seeing? What are the numbers telling us? I'm hoping we can do a bit of a deep dive into what the Sydney market looks like as we are approaching the end of February in 2026.
Yeah, thanks, Ciaran. On Saturday night when Domain's numbers came through, the number that instantly caught my attention was that the auction clearance rate for the same weekend last year was higher than what we recorded on the weekend. And I just that was, as I said, that caught my attention. The other number that caught my attention on Saturday evening was 4 out of 5 auction campaigns in Marrickville failed.
Right.
Now, Marrickville's been pretty hot for a long time, and we've got a really great listing that's just come to market in Marrickville. So that caught my attention to see 4 out of 5 properties fail to sell on the day. And that's not something that you would have seen in the last 3 or 4 years in Marrickville, to be honest. Then when I look at a social media post from our preferred analyst, Louis Christopher, he wrote on social media, I've read media reports that the housing auction market in Sydney and Melbourne has opened up strongly, but I'm not so sure that is the case in both cities. Auction clearance rates on our numbers, SQM Research's numbers, are slightly weaker compared to this time last year. It is entirely normal for auction clearance rates to increase following the December period. So the only real way of measuring the strength of the property market in February is to compare against the same period in previous years. And on that measurement, I see nothing particularly exciting for our two largest cities. None of that, Ciaran, is to suggest that there's not good results being achieved in isolation out there. Going back to what I saw locally in the inner west on Saturday night, the sales that were recorded were at about the right price, and there was only one sale that I went, wow, that's a really strong price. So the examples of property achieving overs at the moment is minor. There's a lot of sales happening in the marketplace because there's buyers and sellers that want to transact essentially, but it is an interesting market.
It certainly sounds it. I want to go back just to one of the earlier points you made and just unpack slightly, if we can, the Marrickville example. And I ask because Marrickville, as you say, has been a really hot inner west suburb for the last few years. It's been growing in terms of infrastructure, popularity. It's become quite a hub, a trendy hub, as it were. I'm really interested to get your thoughts on whether you think the 4 out of 5 campaigns that aren't going well are the result of a change in buyer sentiment or maybe seller price and the difference therein? Or could it more be a reflection of people trying to ride the wave of auction success, in inverted commas, in Marrickville and listing the wrong properties for that sale type, just thinking that, if everyone else around them does it, they'll have the same success as well?
Ciaran, a lot of the properties, and in fairness to the agent, they reported these failed campaigns.
Which is rare.
Which is rare when they've had a run of outs. But the majority of those 5 auction results were with the one firm.
Yep.
Now, what happens as a real estate agent? You try to sell your stock, finishing the year off in December, as you know. You come back in January after a break. You've got a full year in front of you. You might have 1 or 2 listings, maybe 3 or 4 from the previous year, but you say to yourself, "Hey, I've got to get cracking here." So you go out and fight for listings. Maybe in January, as was the case this year, there was a lack of stock. There was a number of buyers around. You're a tad too aggressive on the price that you quote the vendor. You get to auction day on the 21st of February and the buyers don't want to play ball with the expectations that you and your vendor have. That's one scenario that's, I think, is playing out in the market at the moment.
Yep.
Another scenario that is absolutely playing out across the city at the moment is because we've had a rate hike and the threat of further rate hikes are coming. Sellers are in denial that that's had any impact on the property market at the moment, which is fair enough. They might be right. And buyers are factoring in Armageddon in some cases and trying to weaponise not just the rate hike that's occurred, but the one that's supposedly coming against vendors. And understandably, vendors don't want to play ball. So if we look at another anecdotal market fact, auctioneer Tom Panos said on the weekend in his auctions that he had 7 out of 7 sell.
Yep.
But he said, make no mistake, there was no boom out there. He said normally where I'd have 4 or 5 bidders at a property, I was getting 2s and 3s if I was lucky.
Yeah.
And it was very, very hard going. It's just that we had motivated vendors prepared to transact on the day. So there's some interesting stats out there that would suggest that the market's more evenly poised than what it was in 2025.
So do you think then, and you know, not to labour on the point, but I'm really intrigued by this because I feel like we were talking early in the year about the carryover and the layover of stock that was higher than usual, slightly out of character for the new year compared with previous years, coupled with the rate rise, which I'm sure people are now at least worried about. I know I got my email this week saying, hey, your rate's going up, which always puts the kind of fear into you. But I'm really interested to know, do you think that it is the excess stock that is causing just the softness in buyer activity? Or do you think that it is, like, is it one way or the other? Do you think that they're scared, the buyers? Or
it's a bit of both.
Yeah, okay, so it's pretty evenly measured.
There's people that are trying to overtrade. So there's vendors that are in complete denial that a rate hike has any impact on a property market.
Yep.
Well, that's wrong to take that position. And then there's buyers who think one rate hike crashes a property market.
Yeah.
And that's equally wrong. But the majority of people in the middle accept that a rate hike pushes a few more vendors into the market and takes a few more buyers out of the market, meaning, as Panos has said in his commentary over the weekend, there's a much tighter balance in terms of bidders per property and balance between the numbers of buyers and sellers in the market. And as a buyer, you need to know that you don't need to go out and overpay for a property at the moment unless you really, really love it. I tell buyers who miss out on properties or friends who ask my advice during a negotiation, and if they're unsuccessful, the thing about listings, they're like buses, another one's coming.
Yeah.
So that's how you've got to behave as a buyer at the moment. And as a vendor, we gave a listing back 2 weeks ago. We had an unconditional 66W contract at above the midpoint of what we told the vendor the property was worth.
Yep.
It was very, very clear that campaign was exhausted and we'd established what it was worth, and the vendor wanted to hang tough for a price in excess of what we valued the property at. We said, look, this is not the market for you, and this is certainly not a situation that we want to stay in. So we're actually going to take the property down, and we'll come back another day in more buoyant circumstances, and maybe you'll be keener to sell then, but our job is done here and we're out.
Yeah. Which is a tough conversation, right? But
they understood.
Yeah.
They understood. Yeah.
So my final question on this point then, before we do move forward, and it's an extremely small sample size, but looking at the failed campaigns in Marrickville versus the ones that Tom Panos had, have you seen, and you know, I'm catching you potentially off guard here, but have you seen any trends in terms of certain areas of Sydney that are still continuing to transact regardless of the number of buyers as opposed to others? You know, are we seeing a dip in the kind of traditional inner west versus outer western Sydney? And we have seen growth in different areas. Is there any indication that there is some regionality at play as well here?
I think those fully capitalised, superbly presented family homes are most in demand, whether it's the North Shore, the eastern suburbs, the inner west or the greater west. There's no doubt about that. But look, just to give our listeners some further sort of insights, nuanced insights into the property market, Ciaran, this time last week, so the third weekend in February, there was about 1,050 auctions in Sydney. On the weekend just gone, there was 1,366.
Yeah, wow.
So the point we've been making here is that a lot of vendors rush to market for the new year is bearing out statistically across the city. Now, the best stat that I've got for you today, we always talk about the number of auctions or the percentage of auctions that sold prior v those that sold under the hammer.
Yep.
In the weekend just gone, 258 properties sold under the hammer. 39 were sold after the auction, but a whopping 379 was sold prior.
Yeah.
So I think that's the most extreme example we've put to the audience about properties that have sold prior. It's normally, if you remember, a neat 50-50 or swings.
Well, it certainly has been this year. End of last year, there was a trend, I think, prior as well. But we evened out and expected that it would continue along that way.
Yeah, but that's an extreme example. 379 versus 258.
Yeah, definitely the biggest we've reported, I think.
And excuse me, what I put that down to is the vendors took the early money, which was the smart move, and the auction clearance rate by Louis Christopher's numbers was 46.6%.
Yep.
On Domain's numbers, they had the auction clearance rate, I think, at 60% on Saturday night. For the corresponding weekend last year, it was 66%.
Yeah.
So what you're seeing here is that these numbers were stronger this week than what they're likely to be in weeks to come, for the simple reason that, we got an auction clearance rate of 46, 47% according to Louis. But a lot of those sales didn't happen around the 21st of February.
Yeah.
They probably happened in the first week of February, and they were only recorded or captured as an auction sale on the 21st. And I think there is, and we're experiencing this on the ground ourselves, there is a subtle shift to how the property market was behaving in late January, early February via the end of the month. So as the people get the letter in the mailbox that you've just outlined saying the mortgage is going up, the reality that interest rates have risen and will continue to rise in all probability is hitting the market now, and it's still to come.
Yeah, it's the dreaded letter. I don't begrudge anyone for not liking that. Interestingly, and this is not exact, but if you look at the difference in sold prior versus sold under the hammer, it's not far off 6% of the total number of auctions, which is the difference between this year and last year, for example. And you could argue in a way that some of those have been captured through the sold prior. Even though they do capture now, they could have impacted the stats, which I find quite interesting and really does hammer home your point that there is an excess volume. So vendors that are smart are taking the money that's there as opposed to rolling the dice on a campaign where they may not get any interest, they may not get the bidders. They recognise that, or they've got a good agent guiding them, that the signs are not there for a strong auction day.
In a lot of cases, not every case, but in a lot of cases, the elements are not there for a strong auction.
Yeah.
It's very difficult to have a strong auction with one or two buyers, I can tell you that.
Oh, certainly. Yeah.
Yeah.
Look, before we wrap up tonight then, Peter, given that we're coming to the end of February, we're not far off at all, actually, by the time this episode goes to air, I'd love to just get your thoughts on where you think we're going to go in the market over the next couple of weeks. And obviously we'll visit a market wrap early in March and what you say may or may not be prophetic. But I'm interested, just based on the trend over the last few weeks, based on how the year started, based on the conversations you're having with buyers, the sentiment, the seller sentiment, the appetite, all of the factors that you consider as an agent. Where do you think the next few weeks is going to go? And even, project it slightly further as we come to Anzac Day with the new public holiday this year on a Monday. Where do you think the market is likely to head in terms of buyer versus seller, whether they're aligning on price and expectation?
Well, look, I guess the first big call is it looks like the RBA won't hike again in March. They'll wait to May.
Yep.
So if we were on the old system, the first Tuesday of every month, the RBA would be meeting and deciding next Tuesday
Yeah.
what to do with interest rates. Instead of that will occur
Mid-month,
not on-
I think.
Yeah, not on Tuesday, March 3, but St Patrick's Day no less, Tuesday, March 17.
Great day.
And lucky the Irish will have a hold there. Hopefully the inflation numbers settle down, but I'm
Not
just
optimistic.
I'm just waffling now. That's probably absolutely no chance. But hopefully, the numbers suggest that another rate hike is not warranted, and the RBA's blatant efforts to jawbone the market into place work, and we do see some cooling in the inflation, but the reality about that is it's not really the consumer that's driving the inflation this time. It's the government, and the government's problem here is that now the man in the street, so to speak, who has no interest in economics, knows that the government's the one that's causing the rising inflation through their excess spending.
Yeah.
I just saw down in Victoria, building some new road or tunnel down there, they've just given them an astronomical pay rise.
Yeah.
And it's like, oh, yeah, well, that's going to fix the inflation problem, isn't it?
It's it's always a challenge, right? The government is always, unfortunately, politics these days is all about positioning yourself for the next election as opposed to doing the right thing in the moment. So all of the governments are sadly looking to just spend for the sake of capitalising on whatever advantage they might have, which is causing more damage, and people unfortunately are going to pay the price.
Ultimately, it causes more damage. Yeah, in the short term,
infrastructure is great.
Yeah.
Like no one's going to argue with that, right? But if we put ourselves in a position where the economy collapses as a result, that's not a great outcome, right?
Ultimately, that's right. So the next few weeks will probably, hopefully, the RBA will hold on March 17. I don't think the volume of stock will stop during March. Mm-hmm. For the simple reason being is that Easter falls on the first weekend of April.
Yeah.
So it neatly just puts a line under Q1 2026. It's coming. Quite remarkable to think that's already in sight. So I think you'll see, and we ourselves have got a lot of campaigns ready to come to market in March with people with a get sold for April mindset, for Easter mindset. Coming out of Easter, maybe stock levels heading toward the winter will be a little bit lower than what they have been for the first quarter, as they usually are. April is a messy month. You have Easter, and as you've just highlighted, the Anzac Day long weekend at the end. So 2 of the 4 weekends of in April are long weekends, which is why a lot of people look to get on the market who want to sell in the beginning of the year and get resolved by the forthcoming Easter. So there'll be the odd property that goes overs just because a number of spirited bidders turn up, or buyers play at a property and really want it and will pay a premium to stop it from going to auction, or they're in a heated off-market negotiation. But I think you'll find that the majority of transactions will follow a trend line, and vendors that are trying to supersede or beat that trend line will fail in many cases. And there'll always be bargain hunters in any market, and the bargain hunters may find their bargain here and there, but by and large, I think the housing shortage is too acute for there to be any massive downside to property prices if the economy does hold at its current metrics. So I guess what I'm saying, to answer your question in short, is I think the existing trend will run through to April, being Easter.
Yep.
Coming out of Easter, stock levels will drop. That will benefit vendors, as it usually does, from post-Easter till the start of spring. And then we'll wait and see what the numbers say about a May rate hike, which is when money markets have one factored in.
Yeah, really good recap, Peter. Certainly be interesting to see, from my view, what happens in May, because I know we've spoken before on the podcast to potential sellers about the challenges potentially, or the differences in campaigns in the winter when your house is a different beast to market, combined with a possible rate rise, combined with coming off a busier start and maybe a slower middle. So I think the property market's up for an interesting few months ahead, that's for sure. Look, as always, really great discussion today. I'm sure our listeners have found something valuable. And I encourage any of our listeners who do want any particular insight to just reach out and let us know, and we can cover it for you. But As always, Peter, thanks for coming in.
Good on you. Thanks, Ciaran.
Thank you, and thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.